What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 7th of 2022. Let's go ahead and dive in. We had a big change of character in the market, a big bounce that not many were expecting that we had been positioning for the last few trading days. So we're going to dive right in. In terms of our headline indices, we had the S&P 500 finishing up 1.8%. We had our NASDAQ QQQ finishing up 2.02%. Our IWM small caps were up 2.18%. Definitely good to see those participating. Yesterday they were a big time laggard. Dogs of the Dow were up 1.32%. They were a laggard for today. And typically those dogs of the Dow, they do lag to the upside and the downside. Our ARK Innovation ETF was our big winner, up 3.44%. If you watched yesterday's video or you are a member of the Pristine Capital trading community, you know that we added the double leveraged ARK Innovation ETF to our trading account yesterday. Pretty much all these indices closed towards the upper end of their day's range, and we had a nice volatility crush after the panic put buyers emerged yesterday. Overall breadth was positive. We had 85% advancers in the small caps. We had 84.1% up volume, and our trend model finally shifted from -1 to +1 team. Let's take a look at today's economic data. Not really anything too significant. Oh, my girlfriend is calling me. Let me just mute her real quick. Yeah, this is going to be a short video just in case she needs me. Let me see. We had some Fed speakers today, and to be honest, I think we had some great sound bites from these Fed speakers. You'll notice, and this is something you only pick up if you have legitimate screen time, if you're, in the arena every single day, if you're watching the news, the Fed speakers, their tonality and their messaging does change based off of the day-to-day fluctuations in the interest rate market, based on the day-to-day economic data. It's very similar to like if you're a price action trader. Like every day you hear me speak, I'm slightly different based off of what the market did, incoming data, whatever. Well, the Fed is the same exact way. So I think what some people do is they anchor on what the Fed said last, and they don't really focus on what the Fed is currently saying. So today, the tonality was different in that they pretty much said, hey, we are going to keep monetary policy tight for so long as inflation is a problem. That's going to dictate, what we're doing. And today we got some really good news in that crude oil just completely tanked. Let's actually take a look at crude oil because I think this dovetails in pretty perfectly with what the Fed was saying. So let's check out our /CL. Crude oil is trading up ever so slightly in the after hours, but we did take out this virgin point of control over here. We're trading down to the Venom S1 pivot. Crude oil right now is trading at $82.24 a barrel. And just for context, I want to zoom out to the monthly chart and look at what happened here. Let's zoom right on in. And this is the beginning of 2022. You can see that crude oil has pretty much erased all of the year-to-date gains. I'm going to repeat that and just let that sink in. Crude oil has erased all of the year-to-date gains. In terms of the CPI report that's going to be released in 4 trading sessions, going to be released September 13th, that is one of the big components of the CPI. And granted, the very end of this sell-off in crude, it's happening in September. The CPI report is going to reflect August data, but we already got one inflation report under our belts that showed inflation decelerated. I do believe we have the potential for another deceleration. So think about it, like when the S&P 500 was trading like on the ding-dong highs a couple weeks ago, everyone was like, "Oh my gosh, I'm so convicted that there's going to be a Fed pivot. This is going to be amazing." Now we have the stock market way lower, we have the bond market way lower, and we know that housing is a big component of these inflation data points. We know that the housing market is starting to slip. We know that energy prices are a big component of these inflation reports. We know that those are starting to slip. So I really think that due to these sentiment extremes, I think there's a good opportunity on the long side. And that's really what we've been getting in position for the last few trading sessions. And I must admit, I was probably 1 to 2 days early on that thesis, but I think it should still work out. We'll have to see how the chips fall. But take a look at this data point from Sentimen Trader. Shout out to Yaro in our trading group. He's the one that shared this with everyone in our trading room chat. And this is like the dagger in the bear thesis. And you can see they posted, sometimes there's a chart that just blows your hair back. In 22 years of doing this, none stand out like this one. Last week, institutional traders bought $8.1 billion worth of put options. They bought less than $1 billion in calls. That's 3 times more extreme than 2008. And take a look at this. Look at the chart. Last week's panic hedging was 3 times more extreme than in 2008. Look at these options premiums. Look how extreme they are to the downside. So pretty phenomenal stuff. And what makes this even better is that on this Twitter post, you'll see the first comments on it are people trying to dismiss the data points, saying like, oh, this doesn't apply. The size of the market was different in 2008 than now, blah, blah, blah. But I think the point still stands. It's just there was extreme put buying that occurred in the market. The title of yesterday's recap video was, panic put buyers emerge. And are these put buyers all going to get paid out on their puts right as inflation is about to have another deceleration? I don't think that's going to be the case, but we'll have to see. Our Finviz Heat Map today, very nice bright green, and definitely got to be thankful for this. We're not guaranteed another one like this tomorrow, but hey, it was a pretty good day today. Energy stocks were the big laggard, and this is really the perfect configuration for the market. Energy lagging, everything else green. You can't ask for anything better. Sectors, solar energy was our top performing sector. It's now in our top momentum slot. What else was strong? Utilities were very strong as well. The fintech sector was very strong. This is actually a group that I want to dig a little bit further into. I'll share with you, since you're a listener on our YouTube channel and a supporter. We have a dashboard that we share every single day, and it's really just like a trend dashboard, and it shows dark index percentiles for all of these broad markets. And this is for subscribers only, and this really helped us off the summer lows. But here's something that I noticed that I just think it's interesting, and I want to share it with you. Check this out. So we have these traffic lights for each sector, and it gets either a green light, a red light, or a yellow light. And one thing that I'm noticing is, like, the solar sector, it's very obvious, right? Like, oh my gosh, now everyone is probably salivating over those solar stocks. We already have some big exposure to solar. I have CSIQ on. I know other members of the group have other solar stocks on. SHLS, that was an awesome performer today. One of our guys picked that one up, so great job. But look, this is a much less obvious sector that you're not going to see everyone on FinTwit talking about. And it is the capital markets group. Where is this here? I think it might be towards the bottom of the list. Oh no, it's right at the top. Capital markets. Yeah, closed on the highs of the day. And this group is now above the 5-day EMA as well as the 20-day simple moving average. And I do think there's probably some overlap between that capital markets group as well as the ARK FinTech Fund. So that could be a group, as you're doing your nightly homework, to take a look at. I'm certainly going to look at that, and any compelling charts that I find, I'm going to post for Pristine Capital members. If you're interested in signing up and becoming a member of our trading community, go to pristinecapital.net. Anyway, all right, so those are our sectors, pretty much strong across the board. The big laggards were energy. They were also the cannabis sector. And then in terms of style factors, what did we see? High beta was up 2.93%. That is very risk on that we're seeing that group lead. We also had defensives that were up 2.14%, Minvol up 2.01%. Those are obviously more conservative areas of the market. Now let's take a look. We're going to go to these headline indices and really just assess the landscape and see what's going on today. So we already talked about crude, right? I think we do have to have a short conversation about the United States dollar. Dun dun dun. Dollar index. You can see this morning, all I was seeing was stories about, oh my gosh, the dollar index is like going to the moon, whatever. The financial media was really pumping that narrative. In our process, we follow the dollar every single day. It is an indicator that we track, very important in our trading process. And most traders, most punters, they really don't follow it. They don't follow the FX market. They don't follow the bond market. They're just kind of equity punters doing their thing. And so the fact that like everyone was suddenly like honed in on the dollar, oh my gosh, look at this, look at this. We ended up shorting the dollar right in the morning, and we got it pretty close to the highs. So that was one of our, I believe it was our only options trade for today. Or actually, we had two. So check this out. We actually got, let me switch these display settings. Yeah, so we got long the UUP, which is the dollar index ETF. We got long the December 16th 30 strike puts for 90 cents. This was at 9:36 a.m. So pretty much right as this thing was trading on the open. And I put here the dollar index, it's getting extended away from the short-term moving averages. We're going to get a CPI print in 5 sessions that could put downward pressure on the dollar if inflation decelerates again. And so far that was a pretty clutch entry. And you just got to be thankful. You don't always get like a really good entry like that. But yeah, we'll see what happens with this dollar short. The good thing is we have until December. It's not like, oh my gosh, we bought like the weekly stuff or anything like that. So we can really just let the trade marinate. And then what else did we do? Twitter. Twitter finally got moving. We've had our merger arbitrage trade on. Shout out to Mimi in the group. So she's been inquiring about this trade, and we finally got to close at least part of it. So check this out. We exited the short Twitter puts. We had sold these 39.5 strike options for a credit of $1.19, and we closed those out today for 16 cents. And I put would rather free up the buying power than play for the remaining 16 cents in this trade. We've talked about this a few times, and I say this as my cat is screaming for me at the door. Let me see if my headset will do me some justice so I can let her in. Yeah, Twitter, check this out. Twitter put in a really nice green candle, and I think the odds are pretty low of that deal actually going through, but they're not zero. Go on, Coco, get in here. So yeah, we finally saw some buyers step in and take this thing to another level. So yeah, we took off that trade. I still have some call options in this name, and we'll see what happens with Twitter. What are you doing? Jesus. Yeah, so we will see what happens. But let's take a look at the S&P 500 and just see the levels. S&P. So yeah, this is pretty crucial. We're on day 15 of this sell-off, and I want to just reiterate the sell-off, the September sell-off in 2020 took place. We hit the bottom in 15 trading sessions. We were just on day 15 of this sell-off today. In 2021, we also had a September correction. It took the market 20 days to bottom out, but we did have some nice bounces in between. So, everyone now is like all doom and gloom on the market. I'm sure you'll start to see them change their opinions if tomorrow's another good rally day. But we're, in my opinion, closer to the tail end of this sell-off than, the front end. So, yeah, and take a look at this hourly chart. This is pretty actionable that we can carry forward into the rest of the week. We were trading below this weekly value area, and then we crossed into it this morning, and we held inside of it. And we actually triggered an 80% bullish rule. And the 80% bullish rule is, if you're trading below that value area, and you get in and you establish yourself inside of value, there is, quote unquote, an 80% chance. I'm not sure if it's actually 80%. It's probably not, because that would be like a silver bullet. But I do believe there's some edge in that, the odds of you tagging the other side of value increase. So I would not be surprised at all if by the end of the week we're trading up here at this 40-30 spot 2.5 level. So definitely keep a watchful eye out for that. And where would that put us on the chart? Let's see. Yeah, that would put us pretty much like right at this 50-day simple moving average. That does seem plausible. I'm sure there's a bunch of, buy stops right at that level. So perhaps we test that level, perhaps we look above it. And from there, I think the risk reward's not quite as good as it is right now. So yeah, you'll see a lot of people that are trying to like buy high and, sell higher. While we're in this bear market, that hasn't really worked very well. You do have to buy low and sell high. So we'll have to see, but that's for another day. I definitely think you want to keep this 50-day simple moving average in mind. Let's take a quick peek at these other indices. We've got the NASDAQ looks pretty similar. Perhaps we get to this 50-day simple moving average. We have our Russell 2000, which is, yeah, also, could we get a test of this bottom of value? Absolutely. And we've got our dogs of the Dow Jones. Could we get a test of this 50? We certainly could. Now let's take a look. The only other trade that I did besides closing out part of the Twitter trade and adding that dollar short, I also added some HUD 8 common shares for $1.83. This is a stock that I really enjoy trading, and this is one of my my better stocks to trade. But I do think that we could see a crypto rally because we're on this thesis that inflation likely peaked. We're probably going to get a rally in bonds, probably going to get a rally in the ARK Innovation ETF. With that, usually crypto does rally as well. So this was not a trade of like, oh my gosh, I got so much confirmation, we're back inside value. Like, none of that. This was really like, I think this is going to happen. So let me step out in front of that potential trend change. What I do want to put on your radar for HUT is we're trading below this weekly value area. Could we, if we get another good day tomorrow, could we reestablish ourselves back inside of this weekly value area? Absolutely. And from there, perhaps we trigger, bullish 80% rule. So for this setup, I am getting out in front of that. And let's actually see what crypto is doing in the after hours. Yeah, and check this out. So crypto, some nice green action after it really looked like crypto completely capitulated yesterday. So yeah, it's good to see that we're getting a little bit of a bounce back. So yeah, heading into tomorrow's session, I really think it's all about just maintaining composure. If we get a small dip in the market, not the end of the world. We had a pretty big advance today. I don't want to get freaked out by a 2-minute candle, a 5-minute candle, a 1-minute candle, anything like that. Take a look. This is CSIQ. This is our biggest position that we have on in the solar group. This one broke out of the monthly value area today. We have Enphase. This one, we are not currently in this stock. We are in this stock on the last run up in solar. This one broke out of value and it actually already hit the Venom R1 pivot level of 318 or about 316 spot 23. That one is definitely the leader of the group. We have SHLS. Again, one of the members of our group took this trade. This one did absolutely fantastic today. And this one still looks really good. We've got some room up to this Venom pivot level. What else? We do have some good looking names. MNTK. As my cat is meowing at me. What the heck, Coco? You can see her over in the corner of the room. MNTK, this one also looks pretty solid. We're bouncing off the 20-day simple moving average. So yeah, there's definitely some good looking candidates. I'm going to be doing some scanning tonight. And again, I'm going to be posting those good looking names out for Pristine Capital members. All right, everyone. Have a great night. We'll see you all tomorrow. Should be another interesting session.